According to TipRanks, the consensus on Wall Street is that voice over internet protocol provider Vonage is a strong buy for investors. Morgan Stanley analyst Meta Marshall initiated coverage of the stock with an equal weight rating. Interestingly, though, Marshall thinks Vonage stock, currently at about $10 and change per share, could run to $15 per share within a year, delivering about 45% profits to new investors. So, let's take a look. Oh, yes, welcome to Vonage. Vonage sports a 395 times earnings valuation today, so it's not on the cheap side. It's hard to imagine why investors would pay 45% more to own a stock where earnings declined 45% last quarter. On the other hand, though, Vonage's sales increased a respectable 15% last quarter, and earnings will likely soon follow. Expectations are for earnings to average 12.5% annual growth over the next 5 years. On another positive point, Vonage's free cash flow is already positive, with about $65 million generated over the last year, or about 10 times reported GAAP profits, GAAP being GAAP profits. Marshall cites the company's leveraged cash flow as a reason to like the business and says he sees significant value in the stock from a sum of the parts perspective. Overall, TipRanks analysts show Vonage as a strong buy. Based on 5 analysts polled in the last 3 months by TipRanks, 4 rate Vonage stock a buy, while 1 says hold. Well, let's go and take a look at our charts. So we're looking at the monthly chart on Vonage Holdings Corp. And the symbol is VG. For disclosure purposes, I do not have any shares of Vonage at this time. Now the price chart goes back to say 2006, but you can see here that the bottom was in mid-2009. But subsequent to that, we've had a very nice move upward in an arc fashion, moving on up like here. And you can see that the price is basically riding along that 50 EMA. Now, the downtrends there in 2016, another downtrend, say in late 2018, early 2019, and then the current downtrend. And I would expect this current downtrend to head toward that 50 EMA. So watch for that. On a traditional technical basis, I think that's the best place to pick a price point on it right now. Looks like it's moving on down there. But let's go take a look at the oscillators, beginning here with the MAC. And you can see that we're elevated above zero, which is good. So there is some strength. Now, we had the initial selling here with then the fast line moving sideways, tried to move on up through the slow line, but got reflected back. Now, we've talked about this in times past, and so here's another good time to talk about it. There is too much space between the fast line and the slow line there for the fast line to move on through there. The probabilities are that that's too much space, so it's going to get reflected back down as it did. So wait for this next basing pattern to occur someplace, hopefully above the zero line. I'll just draw it here in this area. Hopefully it comes down here and makes another attempt to go through that slow line, and the slow line should move through like that. So wait for that pattern to occur. It's kind of like a W pattern. Let's go back up to the price chart. So you can see that the current level here of the decline is well above that bottom there in the previous decline. So if things work out, this decline will come down to near that 50 EMA and still be well above where this previous decline was. That's a great position for that decline to be in, where at the same time as the MAC is down here at about the same level. So watch it move like that, come down here and reflect back up. Looking here at the histogram, pretty much the same thing you'll see here. Hopefully this comes down. I would imagine it's going to bottom out someplace above this level here. But even then, it's still at a slight negative of a 0.25. That's not too bad. Moving here into the price rate of change, same sort of pattern shows up with the fast line moving down here, moved on up to the slow line, got reflected back down here, and we're still above that -5, so it's not very negative at all. Moving here into the RSI, we're at a moderate 44.46, but I like this move here, and we're still in an upward pattern there. Looking at stochastics, same sort of thing. You can see volume is fine, and then the Williams as well. Same thing, bottom there and upward move. I think this is going to stop someplace short of that -80 point. So that's going to show some progress. Back up here to the price chart. So what happens is when the price does base or bottom again, I'm expecting that to be at or near that 50 EMA, maybe above that. And when things do turn around, then the next move is going to be even higher. This is this kind of a slingshot stock that you can see every now and then. But these patterns, they'll show up time and time again. And so just watch them. Just watch how they formulate and evolve, and you can pick your point. But as usual, conduct your due diligence. Complete your analysis of the fundamentals properly. And for today, that's ChewDog Charts. Thank you.